Hello all, I'm Michael Watson, Head of Distribution Asia Pacific with La Trobe Financial. Welcome to our monthly economic outlook. I'll get straight into it, noting that since late 2020, our economic message has been clear. The outlook was, is, and continues to be far better than we had any right to expect post-pandemic. Despite further COVID lockdowns, continued tensions with our largest trading partner, the rise of global inflation, and of all things, a tragic war in Europe, the Australian economy has defied gravity. That's not to say there are no challenges or speed bumps ahead, but the economic outcomes are outperforming the headlines by a considerable margin. Let's recap 2021 via 4 key economic indicators. The year started with promise, until the V-shaped recovery from 2020 was T-boned in July by the Delta variant of COVID-19, which saw 58% of our national economy in a multi-month lockdown. GDP turned negative in Q3, but by less than that of 2020, and Q4 saw another strong rebound. Unemployment continued its steady downwards march, with only a small Q3 blip. Household savings was well above trend, and our terms of trade hit record levels on the back of sustained global demand for our commodities. I'll take no pleasure from plagiarism, but given the headlines and what could have been, this was indeed a beautiful set of numbers. We've been through a 2-year period in which virtually every material data print has come in ahead of expectations. Despite that, analysts continue to miss out on the downside at every opportunity. Take the recent federal budget, a pragmatic election year budget if ever there was one. It did a pretty good job of nailing the zeitgeist. But beneath the headlines, the budget bottom line over the next 2 years is $40 billion better than previously expected. There's a $143 billion improvement by financial year 25-26, of which around $40 billion is going to new policy decisions. Pause here for a moment. That's $143 billion better than was projected as recently as December. It's a heck of a miss. So, we're on a slow path back to fiscal consolidation. Deficits as far as the eye can see, but shrinking as a percentage of GDP. And there's plenty of funding for the causes we're all thinking about. Cost of living, defence, mental health, the environment, and so on. A key missing element, of course, was structural reform. In the long run, economics is all about productivity, and there was not much on that. But perhaps that's too much to expect for an election year. The bottom line is that economists are united in seeing good forward GDP growth, historically low unemployment, the best we've seen since the early 1970s, slightly higher but manageable inflation, stabilising house prices after a period of very strong growth, and an official cash rate that is trending higher but which will still be low by any historic standard. At La Trobe Financial, we're big believers in that great quote from John Maynard Keynes: "It's better to be roughly right than precisely wrong." So, acknowledging the consensus outlook, let's take a quick tour of the key headwinds and tailwinds that will shape outcomes in 2022 and beyond. The first headwind needs little discussion. The Russian invasion of Ukraine is a humanitarian disaster and an economic shock, especially for Europe. In the long run, we expect it will have the opposite effect of that intended by Mr. Putin, but for now, it's going to be a headwind on growth. Treasury estimates that global headwind at 0.75% of GDP and positive 1.5% impact for inflation. Which leads to the second headwind, being inflation and rising interest rates. The key points here. So far, inflation in Australia is nothing like the 7% plus prints seen in the US and other parts of the OECD. The highest projection in our economist survey is 4.7%. Virtually everyone is projecting that inflation will then moderate back within the target range of 2 to 3% in the 2023 calendar year. Money markets are clearly bears, projecting a 2.8% official cash rate by mid-2023, versus most economists who are in the 1.25% to 1.75% range. So watch for discussions on wage cases and inflationary expectations. It will be back to the 1980s and early 1990s for all of us. The final headwind still has to be COVID-19. I know that we think we're through the worst of it, but we thought that last year as well. So let's keep this in the headwinds bucket for now and see how 2022 plays out. But while we're doing that, let's also call out the incredible progress we made from the middle of last year in going from vaccine laggards to vaccine leaders. It was truly remarkable what we achieved as a nation there. So those are the major headwinds. Let's flip to the tailwinds now that are driving us forward. And who would have thought that global pandemics would be positive for household balance sheets? Because apparently they are. Household deposits are up $290 billion in 3 years. Mortgage aheads have accelerated significantly, and household wealth continues to run well ahead of liabilities. This is strong positioning for an expansion in consumer spending in forward periods, although we expect to see caution and higher than average savings levels until we get more certainty around COVID outcomes. The second tailwind is migration. That's a tectonic force about to be unleashed again. In fact, in December, Treasury expected net overseas migration to detract from population growth this financial year. Now they're saying it will be a positive. And Australia's COVID track record and strong economic performance will continue to be a drawcard for the migrants that bring so much to our country, and particularly to our economic and social lives. They're younger, they raise families, and importantly, they do the jobs that we otherwise can't fill. So that's a welcome return from every economic angle. Which brings us to the third and final tailwind, Australia, the lucky country. Any serious student of Australia's economic history at some point has to face the challenge of determining whether our success is due to good management, blind luck, or some combination of the two. And that's exactly the dilemma we're facing now, because Australia is unbelievably well positioned to benefit from the biggest investment and economic megatrend of the coming generation, the transition from fossil fuels to green energy. Not only do we lead the world in dark brown fuels like coal and light brown alternatives like LNG, but we're better positioned than practically any other country in the world to capture the green energy transition through our deposits of new energy metals. And we have the world's most advanced mining industry to extract them. And that's not even counting the uranium opportunity, which might be back on the table post the Ukrainian invasion, particularly through Europe. So no complacency permitted, but we are in an extraordinary position as a nation, and we should never lose sight of or squander that. And that concludes our economic update for April. Continue watching for the update on the property market and sector. If you have any queries, please do not hesitate to contact our asset management team on 1800 818 818. Thank you.